All right. I've got you here for a couple hours to do the best I can to give you the best information I've got. Been doing this since 1959. I did my first trade way back then, a little stock called elastic stop nuts, those little plastic things that replace nuts and bolts. Made a few bucks, and I made $800, and I bought a car, and I was getting ready to take my first year in college. And why is there an echo? Does anybody know why there's an echo? Okay, this is a life-size oil painting that is in Los Angeles at the Manly Hall Institute of Metaphysics. It's a picture of what Pythagoras looked like. No one really had a really good picture of him. He was in 600 BC. Albert Einstein said he was the smartest man ever to walk the planet. If you notice, he's pointing, you can see a globe on his desk here. He's pointing to a triangle. He's holding a triangle. The triangle above his head is very important for what we do because it's based on probability. But the globe is what's important because he knew the Earth was round in 673 BC. He also knew the distance between the Earth and the moon was 250,000 miles. He was the first man ever to use the square roots of numbers. In fact, his work was so unusual that he had to go underground, and that led to what they call the secret school of Pythagoras and all the things that you hear about as far as the Knights Templar and all this other stuff, but I'm not a believer in that stuff. But he was very, very important to this. Now, these slides are going to be available to you if you'd like to have them. I'll go through them one at a time, but it's how I arrived at these patterns. Why is there talking in the background?
Please, guys, switch off your mics, yeah? Mute all, okay? And now, oh God, this guy is, this is not fair, Where is Uncle Larry? Okay.
Okay. This is the diagram above Pythagoras' his head. It's also known as the chaos game. It's also known as the Sierpinski triangle. In other words, if you took a dotted line and connected it after you went through 10,000 iterations, you would come up with the bottom triangle with all these little diagrams. That's known as the chaos diagram. What we're trying to do is to find these little patterns and line them up and know what the probabilities actually are. If you'll notice here, all numbers 1 through 0 are all related to angles. Number 1 has one angle, 2 angles, 3, 4, etc., all the way down to 0, which has no angles. This goes back to Arabic stuff back in the 11th and 12th century when they first started repeating numbers, and we went from Roman numerals into digits like we have now, a decimal system. You'll notice here, this is the cosmos and what we're going to be doing, not talking about any astrology here, but just show you that a lot of these numbers come from the same area. There's where we are in the Earth there. You see that little dot, and then all these other things. It's not that important to cover this, but it's how all these numbers are arrived, and that's why I like to bring it to your attention, to expose it to you, because someday in the future there'll be a whole section in CNBC and the Financial Times and other places talking about the astro cycles that are in the market, but it'll be long after I'm gone, I'm afraid. Here is the spiral mirabilis, which is the Fibonacci ratios, expanding and contracting. And what we're looking at is matching these ratios with these patterns that we're going to look at. So it's important that you know where they come from, but in order to derive them, you have to learn to do a little bit of the work yourself. We're going to try to get you started in the right direction today. All right, now this is the chambered nautilus, which is also the Fibonacci sequence. You can see how it starts and expands out to these numbers that we're looking at. I'll cover these in just a minute. It's very simple to use them, but it does take a little bit of practice to learn them, to use them effectively. This is how to do the square roots of the numbers. I'm not going to spend any time with all. This is how the planets move in the universe in this patterns that we look at right here. What this is leading to is to show you how these Fibonacci numbers work and how these spirals are important to what we do. Now, if you look at this one, this is all the planets, how they line up, and these are their synodic periods, how many days, like Mercury, 88 days, Venus, 225 days, Mars, Neptune, all these are all the number of days, how long it takes to go around the sun. And that's what we're watching as we look at some of these things as we go through. Now, the next one, to me, is the most important of all the slides. There's probably about 10 really important slides here. This happens to be one of them. And if you look at the bottom part of the slide, you'll see the the star with the circle and the pentagon, everything inside of it. And basically, if you look to the right, you'll see the numbers 1, 2, 3, 5, 8, 13, 21, etc. Those are the Fibonacci numbers. When you get down to number 34, which is the 8th iteration, that's where 13 plus 21 equal 34. You notice out to the right, that comes out to 0.6176. And you go to the next one, it's 61.82. The next one, 6.80. That continues to infinity. Once you get to the 8th iteration, that number never changes. So the importance of this is you can take any two random numbers, like 13 and 21 could be random numbers, but you could replace them with 77 and 13 and go through the same sequence. In other words, add them together. And when you get to the 8th iteration, it's going to come out to 0.6176, 0.6182, all the way through infinity. So that's important because if we're looking at numbers, we want to know that they are predictable within limits. And that's what you have when you're dealing with Fibonacci numbers. There's not just the Fibonacci numbers, there are other things, that's the mathematics behind it. You have to look at the geometry of what the pattern is looking at. And that's what you have to put together, which is not very hard to do, but it takes a little bit of time to do it. But these numbers are basically the structure of how the universe works. It's very shortened version of it, but that's pretty much it. This is the most important slide of the whole day. This is the reason why you do this is you have to focus on learning how to be a slot machine. You want to be the slot machine, not playing the slot machine. Nowhere on that slot machine does it tell you that you have no way of beating me. Nowhere on that slot machine does it say I've taken in $1.2 million more than I've given it out. All it's showing you are these big flashing lights showing you how much you can win. So if you reverse the process and think how much money can I lose, then you're playing like the slot machine and you don't have to, worry about it because you can't beat it long term. But if you're playing as the slot machine, you don't have to because it's all about probabilities. Just do the trades as you see them come up. Focus on how much risk you have to lose, not how much money you have to win. Winners think how much money I can lose. Losers think how much money I can win. That's why Las Vegas and Macau and all these big gambling places do so well, is because they have flashing lights everywhere showing you the millions of dollars that you can make just by playing these games. And boys and girls, believe it or not, it doesn't work that way. So you got to think in terms of how much money you have at risk, not how much money you're going to make. If you can learn that in these 2 hours, you've learned more than most people will in a lifetime. Now this slide here is very important. This is a slide from a Business Week in April of 2000. It was written by Dr. Andrew Lowe from the Massachusetts Institute of Technology, the financial engineering section. And basically what they did was they picked stocks from the New York Stock Exchange and the NASDAQ and the American Stock Exchange from 1962 to 1996, a 34-year period. And there were 800,000 different observations that they looked at. They were looking at double tops, double bottoms, triple tops, triple bottoms, head and shoulders patterns. And basically, Dr. Lowe came to the conclusion the market was chaotic. But within the chaos are non-random patterns and numbers that repeat over and over again. And the reason why it was important is they repeated with such regularity, they could be predicted within limits. This led to a book called The Non-Random Walk Down Wall Street by Dr. Lowe. It's a 700-page book with the most incredible formulas you'll ever find. It's way over this cowboy's head. But it basically, in dollars and cents, it said, yes, patterns exist. They do repeat. And if you can understand them and define them, you'll be able to beat the market to some extent. Not all the time, but most of the time. But that's what we shoot for. Anyway, we'll move on to the next one. This is from my good friend Bryce Gilmore. It basically describes when you're looking at a chart, you're looking at a price chart, which is a square. Within the square are the two right triangles. The hypotenuse of those triangles will be Fibonacci numbers. It contains a pyramid, a circle within the circle. That's basically that Fibonacci spiral we were looking at before, where 18, 21, 30, all those numbers were there. And basically you get to the right is where you're trying to be in that right-hand corner to see what you're looking for as far as watching for the pattern. Okay, now this is the same diagram, on a 3D version. It comes from the book Torque Analysis of Stock Market Cycles, and basically it's showing you the repetition of how the market goes from a square to a circle to an ellipse. I don't know if you can see my little marker there, but there's the square, there's the circle, there's the ellipse, and it goes all the way out to pi, which is the circumference of a circle. This is what we're doing with pattern recognition in a roundabout way, is to find these numbers to see where they line up, because once a market moves from 1.618 and goes above that, it's heading towards 2.618 or even pi. So that's why these are relatively important. The next one we're going to look at is, this is the whole basis of what we're doing this today, is to show you how simple it really is. The two numbers that we're looking at on the top are the two Fibonacci numbers, 618 and 786. These are contracting numbers. One is nothing more than AB equals CD, or parity. 1.27 is an expansion number, and 1.618 is an expansion number. Those are basically the 5 ratios that I use. You'll see others that are in there, but they're so close to these other numbers for trading purposes, it won't make a whole lot of difference. It's really quite simple. Keep it as simple as possible. Remember, folks, I don't use any oscillators or any technical tools other than a straight edge, a calculator, and looking at these numbers. That's really all I'm looking at. You won't find any oscillators or moving averages or anything in any of the things I do, because they're lagging, and I think you have to be ahead of the market and not lagging as you go through these. Now, this is from the Leonardo da Vinci's work, the Codex book. This was bought by Bill Gates in 1986, and he gave it to the Smithsonian Institute. It travels 6 months a year all over the world, and the rest of the time it stays in Washington at the Smithsonian. This is on this page here. This is the numbers and ratios of the human body by Da Vinci. If you look at the writing at the top, this is all written in Italian. And Da Vinci was a little bit, well, he was quite paranoid, actually, because he wrote everything backwards into a mirror. I don't know if you know this about him, but he could write with both hands equally. In other words, he could write his name and all of his works. He could write at the same time, left and right. He could go backwards. I mean, it was just an incredible feat of what he could do. And so in order to describe on some of these things what he was doing, he would write backwards into a mirror. So the only way the person could understand it would be to turn the painting around and look in the mirror, and then they could read it. That's why the book is named the Codex book. What's important about this is, you'll notice here from the top of the head to the pubic crest to the bottom comes out to 0.618, and he's showing all the relationships of the human body, from the radius to the ulnar, the tibia to the fibulas. All of these, even goes from the head to the top of your head to your nose to your chin. All of these are relations to 0.618, as showing here on the right-hand corner in the bottom. Now, 2,500 years ahead of time, the Egyptians had done the same thing in one of the pharaoh's tombs. They had this diagram showing this spiral there. And if you notice, that is nothing more than the DNA spiral. You can see it 1, 3, 5, 8, 13, 21. That's exactly what you're looking at. And it's showing how the ratios and proportion of all the human body come out to the 5th diameter. If you'll see the bottom down there, 0.618. And that's what they were trying to show you here. This diagram is very, very important here, this DNA sequence, because how we are as a human being determines where our genes line up along this sequence of this spiral. And this, my friends, is one of the most major things that has ever happened for the UK. But because of this diagram right here, there has never been a conviction of murder in the United Kingdom. And the reason for that is they all have the same DNA. Now, that was a little joke. I don't know if it went over or not, but we'll see. In the US, it goes pretty good. All right, let's get down to where the pedal meets the metal. We're going to try to show you how some of this stuff works. This is the euro over the 15-day period. As you can see, the market goes up and down. It looks like an EKG of a cat that's ready to take his last breath. But what we're going to try to do now is we're going to take some of these little simple patterns that I'm going to be showing you and matching up with these ratios, and show you that you can actually predict what the euro is going to do in a reasonable amount of time, with giving you a high probability of winning. And that's the whole case. So if we assume that this is a downtrend because you have lower tops and lower bottoms, that determines a downtrend. If you have higher bottoms and higher tops, that determines an uptrend. So that's important to remember that. Now, all I'm going to do now is to overlay those patterns with the ratios that we're looking at. And now you're starting to see the contractions are 618, the expansions are 1.618, the contractions are 0.618. The Zarif, can they see my arrow?
Yes, I can see it, so
Okay,
I should be able to see it. Yes.
Okay, 'cause that's what you're looking at. You're looking at these little ABCD patterns. We'll go into in a minute, but you'll see these ratios, how they line up. And we'll look at these today if we have time in the euro, because you're going to be seeing the same thing that we're looking at here, because nothing really changes. So that's the important thing. Remember, this does change over and over again, but it remains the same as far as the numbers. In other words, when the market starts to go up, you see here, we're starting to see higher bottoms now. That means the trend is starting to change. You have higher bottoms. You still have lower tops, but you're starting to get higher bottoms. As soon as you have a higher top and a higher bottom, your trend is turned up. It doesn't make any difference whether it's a 2-minute chart, a 30-minute chart, a yearly chart, a monthly chart. Doesn't make any difference. It determines on when those higher bottoms turn and when the lower tops turn. That's when your trend changes. So at any time someone tells you what the trend is, you have to ask them what time frame you're looking at. You ask anybody what's the trend in the stock market in the United States, and they will say, oh, it's up. Well, today it's not. So you'll have to ask them what that time frame is. Okay, let's take a quick look here. Now, these are how these ratios will help you predict what the next trading range is going to be. You'll see here that you have these same ratios that we're looking at, and all it does is it goes out in the future, day after day, doing the same thing day after day. Once you understand how the sequence of this works, it's really quite easy to predict. Now, you'll not see any oscillators. You don't need those. You don't need any moving averages. You just wait to get to these ratios, and that's where you're ready to then make your trade or put your position on, and then you'll be able to see what you're doing. Okay, now this is the ABCD pattern. Now, I found this pattern in 1970 in a book called Profits in the Stock Market by H.M. Gartley. That book cost $1,500 in 1937 in the United States. That was the cost of 3 Ford automobiles. Hold it 1 second. I need to take a little drink here. Haven't worked this hard in 2 months, Zarif.
Sorry, Uncle. You know me.
No, that's a.
You know me, slave driver. Yeah. Sorry.
Okay. All right. Okay, this is the ABCD pattern. I'm going to show you what the pattern looks like. It's basically, this is the parallel panel. This was on page 250 in the book. You see you have uptrend when you have higher bottoms, higher tops. That's the definition of an uptrend. See, what we're trying to do is we're trying to pick points C, D, and E for trading purposes. That's what our job is as a trader. That's an uptrend. This is a downtrend. You can see that right here. Now, these two patterns right here have been sold in the United States over the past 60 years as trading systems. One was sold for $4,500 as the Trident trading system by Charles Lindsay, and another one was sold by a man named, oh dear, now I'm going to have a little mental breakdown here, Charles Tubbs. Charles Tubbs sold it for $3,000, and that's basically it. I found this pattern in 1970 and started using it, and then added it to a few other patterns that were in the book. But this is the one we're going to be focusing on today, because this is what the market does all day long, goes up or down. That's really all it does. Either goes down in a downtrend, or it goes up in an uptrend. It's that simple. Now, what you'll do is when you start to see these, this happens to be the dollar yen on just a 10-minute chart. You'll notice the AB leg and the CD leg are equal in time and price. That's when time and price are squared, and that gives you your most positive outline for a pattern. But the problem is, it only is perfect like this about 40% of the time. The other 60%, the CD leg, will be a little different than the AB leg. It's still usable, but it's a little bit different. So let me move on here to the next slide here. This is just there's a whole bunch of examples in here. I'm not going to spend a whole lot of time on these because I want to do these in live to show you them, but these are just a larger ABCD pattern here. I didn't even draw some of these because it would have made it too cluttered, but you'll see here, this is another pattern called a 3 drive to a top pattern. And you'll go through and you'll be able to see these as another this is the German DAX. You can see the ABCD pattern here. And you know, that these are just some of the things. Don't worry about the Fibonacci ratios yet, because we'll cover all that as we go through here. This is the Gartley 222 pattern. I'll just draw this in to let you see it, what it looks like. Basically, what the Gartley pattern is it's an ABCD pattern, A, B, C, D, that comes in at a lower high than the previous high. In other words, this high right here is lower than this high right here. So you have an A, B, C, D pattern right there, and that's where the Gartley completes. Now there's other patterns in here, but that's it. There's others in here that are going to be easier to see. There's a whole bunch of Gartley patterns on the weekly on the euro. You'll see you have an A, B, C, D coming in at a lower top, another A, B, C, D coming in at a lower top, A, B, C, D coming in at a lower top. That's what that is. That's nothing more than the Gartley pattern. A Gartley pattern is this ABCD pattern right here that's coming in at a lower top. Now on a bullish side, it would come in at a higher bottom. So we'll have one of those here to look at, and you'll be able to see that one right here. There's a Gartley pattern right here. There's your A, B, C, D. And of course it goes up and makes another A, B, C, D. That's all the market's ever doing, folks. A, B, C, D. That's another Gartley pattern right here. So that's what we're trying to do. I've given them names. You can name them yourself, whatever you want to. You can name it after yourself or anybody, but that's really what they are. They're quite simple. There's 6 buys and 6 sells, a total of 12. We're going to cover them all today. And the only problem that I have here is that we've been doing this for about a half an hour already. And you're going to find this hard to believe, that it takes longer than 2 hours to be a professional trader. I know it's going to be a shock to some of you, but that's the absolute truth. It actually takes 3 hours. You can't do it in 2. So you got to do 1 hour on your own to study this stuff when you're on your own. Otherwise, you're not going to be able to get it. All right. Here's the same thing. Well, I've got a whole bunch of patterns on you. You'll get this because it's not hard. You know, here's a Gartley cell pattern here. You see there's an A, B, C, D at a lower top. Here's a perfect one right here. A, B, C, D. And you'll see these each day. I'm going to show you some of them. There's another one here. This is the DAX. I think that's a DAX, AX. It might be. I don't even know. It's been so long since I looked at this one. I can't remember. Okay, now the butterfly pattern is a Gartley pattern that has failed. Let me show you that. This is the geometrics of the butterfly. Here is, you see how the Gartley pattern would have stopped here at a lower top? When the ABCD goes into new high ground, that's a butterfly, either high or low. And you'll notice the ratios are still there, 1.27, 1.618. This is a 78% retracement here. So those are some that we're watching out. But this is I believe this is the US dollar, British pound. I'm not actually sure. When I do the next chart, it'll put all, when you look at here's where the problem is. You're listening to me, been going, 35 minutes or whatever it is. Well, it ain't been that long, has it? No, it's only been about 20 minutes. Okay. When you go home, you're going to look at this and say, what the hell did that guy try to tell us? Because I'm talking really fast. I'm trying to get a lot of information across so that there'll be 1 or 2 out of the 100 people that is going to say, you know, that makes sense to me. But frankly, I'll be surprised if there's more than 1 or 2, because most people don't want to do the work. They think it's too complicated, which it's really not. And this is what's going to happen. When you're going to get home, you're going to be looking at a blank chart like that, and you'll say, I don't see a darn thing of what he was talking about. I can, trust me, that's going to be the case. So you look at this chart like this, and the only way you're going to do it, folks, is you print out a chart like this, and you just draw the lines in. You draw from the high to the low, to the high, to the low, the high, to the low, to 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 the high, to the high, to the low, high, low, high, low, high, low, high, and continue down. And pretty soon you're going to see a chart that's got a bunch of lines on it. And that's what you're going to be looking at. You'll start to see, look, there's the A, B, C, D pattern coming in exactly at the 78% level right there, spot on. And then you're saying, well, if that's the case, this should be a larger A, B, C, D to the downside once you start to define these. And you'll notice you'll see these A, B, C, D patterns all the way through here, A, B, C, D. And notice when they start to extend, that's telling you that the trend is starting to pick up speed. And you notice that the rallies become, where is it? The rallies start to become less and less, and that means you're heading down. That's what we've been seeing in the gold market over the past 3 weeks. These rallies have been dissipating, getting weaker and weaker, telling us that we've been heading, to the downside. Okay, now this is a butterfly top. See, there's your A, B, C, D pattern. You see that making a higher high. This is a 1.618 expansion of this move right here. Okay, now it comes down and makes a 3 drive to a bottom pattern. We'll see that pattern in just a minute. There's drive 1, there's drive 2, there's drive 3. This is a 1.618 expansion of this move. Okay, here's your Fibonacci retracement back. And so these are how we define what these patterns are doing. Here's another one. You'll see this is a Gartley pattern up here. Here's a butterfly pattern. You notice you have an A, B, C, D right up here. And it's at a 1.414 expansion. Now the difference between 1.414 and 1.27 is insignificant for trading purposes most of the time. They're just very, very close. 1.414 is a square root of 2. I don't use that because I keep it as simple as possible. But you'll see the rest of these are in here. And I'm just showing you some of them because, I missed a Gartley right here. There's a beautiful A, B, C, D pattern coming in right here. That leads to the A, B, C, D to the upside. So what I want to do is get to the actual market so you'll be able to see some of these. Now the 3 drive to a bottom pattern was also in Gartley's book. I think it was on about page 218 as I recall. And basically it's you'll be able to see it because you have to have really good symmetry when you're looking at 3 drives to a top. In other words, you want to see them very clearly. You see here's a drive right here. You can see there's drive 1, there's drive 2, and there's drive 3. And if you measure the distance between these parts, in other words, from high to high to high, is very symmetrical. And that's the way you look at it. Now, here's one on the bottom. This happens to be Alibaba. Look at this. There's 3 drives to a bottom. There's your A, B, C, D coming in right here. And boom, this is one of my favorite patterns, folks, because this one works. Boy, when it works, man, it's a monster. And we just had one of those, I believe, today in the what's it? I think it's a dollar index. I'm not sure. I think it was a dollar index. Okay, here's again. This is a tick chart, a 30-minute chart on the yen, dollar, euro yen. Excuse me. 3 drives. You can see how symmetrical they are. There's a simple rule. If you have to force it to see whether it's a 3 drive pattern, it's probably wrong. It's got to look like 3 mountain peaks or 3 troughs in a valley. I mean, it really has to look really symmetrical. In other words, from high to high to high, they have to look very, very symmetrical. Okay, now let's move on to the next one here. This is the euro on the downside. You can see that one right here. There's drive 1, drive 2, drive 3. Move down to the next one. This is a tick chart. You can see the same thing on a tick chart. I don't recommend these because they'll drive you crazy. I don't recommend anything under 15 minutes because that way you don't have to watch the machine. You don't want to watch the machine. It's not in your good interest to watch the machine. Here's another one. There's a 3 drive to a top, 3 drive to a bottom pattern in the German DAX. And that's an important. We're getting through these in a hurry, so we'll be able to spend more time with these others. This is a Gartley pattern right here. There's your 3 drive to a top pattern right here. Here's your butterfly pattern right here. There's your A, B, C, D pattern right here. This is the Nikkei Dow. So these are some of the other, these are just other, there's a 3 drive to a pattern here. I didn't even draw some of these A, B, C, Ds in, but this is just to give you an idea of what they look at. Now, the harmonics, these are harmonic numbers, and these are the ones, they really haven't changed very much. I don't do the Swiss franc too much anymore, but the pound is running at about 90 pips. The euro is running about 60 pips. In other words, if you go to a half-hour chart and check, you'll see that the pips per hour on an hourly swing chart will be somewhere between 60 and 80 pips. And in the pound, it's between 90 and 110. Now, when the market gets really active, it will expand by 1.618 of that. In other words, the pound will expand by, instead of 90 pips, it'll run out at 150 or 160 pips, and the euro will go out to 120, because just of the fact that the market is responding more to what's really happening in the market. This is what harmonic numbers mean. It's basically is if you took a big rock and dropped it into the water, the wave will be dependent upon how large the rock is and how high the person is that dropped it. So if it's a big rock at a high level, the wave is going to be moving. This would be the president of the Fed, Mr. Powell, would say something about the market. This would be a big rock. Now, if I said anything, it would be like a feather hitting the water, and nothing would happen. So that's the difference between what we're looking at. These other things, I won't spend much time because you'll have to read them yourselves. These are from Mark Douglas about how to think in terms of a probabilistic mindset, and also the 7 typical trading errors that you do. Don't want to waste any time on these because you have to read those yourself if you want to. I'm not going to sit there and read them for you because it's just what I think would not be in your best interest nor in my best interest. So that's basically the PowerPoint. Let me get back here and I will end the show here. And let's get back to what we want to do, and that is to look at some markets, and that's what we're going to do right now. Let's just get up here and take a look. All right, now most of you folks have interest in the S&P. Is that correct, Zarif?
Yes, S&P, forex, and all are gold bugs. Yeah.
Oh, the gold bugs. Yeah, we'll do the gold for sure. All right, well, we probably ought to do the gold. Yeah, we'll do the gold from the beginning. Let's get up here. We're up here. Just give me 1 second here. Get up here to the gold. And I'll just move this out of the way here just a little bit, and I'll just pull the gold right out of the newsletter. I think we'll be able to do it easy enough. I think we can do it this way. Yeah, this is good enough here. Let's get it out of the way here. Keeps asking me that. Why does it do that? Move this out of the way here. Why will that move out of the way? There we go. Get it out of the way here. Okay, here is the gold. This is the going back to last March. I'm just going to do the little ones, folks. I'm not going to do the big ones. This is the big ABCD pattern measured right up here to the high at this level. This is 1.27. The reason why I do that is there's another low down here that I didn't put on this chart, but I wanted to let people know that it was still valid. Then here was the big move here. This is those of you that follow me at TFNN and in the 24/7 newsletter that they have there. This is where we sold it. This was the Gartley pattern right here. You see you have a beautiful A, B, C, D pattern right here. Okay, we sold it there, and then the market broke really hard and matched this low. Everybody said that was going to be a bottom. And look what happened here, folks. You see this little 8-day rally? That's where we sold our second position. We sold that. This one was sold at 1958. This one was sold at 1895. And then when we went below all of these lows, we sold another one here at 1846. And we covered everything this morning at 1867. So we're really ready to buy gold, but we're waiting for this larger A, B, C, D level to complete. Now this one is completed, A, B, C, D. So we've completed that. So we're very close to a really major low in gold. It really is. This is going to be a big low. The reason why I say that is in Gartley's book, he said to buy the first major ABCD pattern that you see in a bull market. Well, believe it or not, folks, we have not had a very distinct ABCD pattern since this market started in December. We've had small ones like this, but nothing really big. See, there was no ABCD pattern back in March. That was just a big correction. It stopped exactly where it was supposed to, right there at 1450. And then it goes all the way up to this level right here. And now we should be somewhere in this area where I think we're going to bottom. We have a lot of things that say it probably would be this week or early next week, because the gold has a tendency to bottom in December. So that's a strong seasonal. So we really want to be watching for a situation to buy it. So we covered that short. And so that's what we're looking at in gold. All we're waiting for now is I want to see how it handles this level here. The low today was 1767, I believe, somewhere in that bulk. I haven't checked it. today, but that's what I'm waiting for to see, because we're rolling over to February gold now. This is still December, and we're rolling over to February gold to look at that. So that's what I'm watching as I'm looking at this right now. Now, let me take a little drink, and we'll ask you, let's take a couple of minutes here to ask some questions. I imagine there's a whole bunch of them, maybe not, but go ahead and ask them, Zarif, if there's any.
Okay.
They'll type them in, that way you can tell me
Yes.
what the questions might be. How's that?
Okay, guys, not all in one barrage, one by one, whatever questions you would like. Lottery numbers, the lot, lotto, anything.
Hi, sir. Thank you for your session, first of all. Now, I just want to understand about these patterns. These patterns are automated. There is a scanner, or we have to draw it manually.
Good, good, very good question. Let's do this. Let me get up here to the live chart here. Let's do the S&P, so that way you can see it in live action. Okay. Okay. Let me show you what. Here's how this is what I do each day for the people that follow me. Okay. Let me get this out of the way here. Here's where we were last night in the S&P. You'll be able to see here that the market opened higher, and that's a 15-minute chart. And it came down and made an ABCD pattern at 382. That tells you that the market is extremely bearish. That's a ratio that's, you know, for advanced traders, but everybody that's following me is pretty advanced. So they know when they see an ABCD pattern over a 3-hour period that can't get above 382, that's a very bearish pattern. So I alerted them just as soon as I could, which was a little bit late because I was sleeping, but it did hit that, and that told us that we were going to have a big move to the downside. And so what I started to do is I went to the next level, and I just drew in what we were looking at. You can see here, there's the A, B, C, D of the larger time frame measuring down to here, which is a 1.618 expansion that comes in at 3605. So I said, this is where we're going at 3605. And so all I did was when 3605 happened to come up, and you'll see it, there it is. There's this little ABCD right at the 382. There's your A, B, C, D right down here at the 1618. Stopped right there. There's a 1.27 expansion, which is one of our expansion numbers. And that tells us the market was getting ready to make a rally. And so all we did for the next thing was to see what the rally was going to be looking at. So you'll see here as we look at this. Are these coming through okay, Zarif?
Yes, perfect.
Okay, all right. So here's the first ABCD right here. There's A, B, C, D right there at the 382. There's your A, B, C, D right here, and then the market starts up. What does it do? It makes an A, B, C, D right at this spot, correct? So that tells us that we're heading down to this level right here, which is 3586. So far we've gone down to 3590 something. I haven't checked it recently, but well, in fact, we should check it recently since we pay for these big things here. Let's take a quick look here. And no, we haven't. We've only been to 3592. We're thinking it's going to go to 3582, but look what we have going now. This is just a 15-minute chart. There was that first move. Well, we'll just put the whole thing together. You can see it. There's the big ABCD. There's the little one right here. Okay, there's the big one right here. This measures down to right here. So you want to say you're going to make, this is really interesting. Look at this.
Sir, this is A, B, C, D right now?
Yes, this is
It's
ABCD.
preparing ABCD?
That's an ABCD, correct.
But the problem is that the BC is basically around 0.721, I guess.
The BC right here, yeah, 7.2, that's correct. But look at the difference here. Watch.
So,
Look at the difference here. The difference between 61.8 and 782 is only 3 points. That's something that's trading for $160,000. That's nothing.
So that's perfect. But now I want to understand if the B and C point is at 0.618, then we can see D point at 1.618 or 1.272. That is the problem. Where I stuck. Generally, I stuck in these problem. I stuck basically.
Okay, well, you never know which one it's going to hit. What you try to do is to find multiple numbers that come through here. this is only halfway through the day. It's only 10:30 in the morning. So let's assume that we have to get to this spot right here, correct? So we could see another, and this is what we probably will see, I'm not sure, but we could see another nice little ABCD pattern forming right here. So get this up here to this level right here. That would get you to right about there, okay? That could be a nice ABCD pattern. Now, if that happens, look what happens when I can't work with you in the back.
Whoever that is,
That
can you
tells
shut
us
his
that we're
mic?
still getting ready to come down to this level. As long as we don't get above here, we're going to that level. You see that? You see the difference here? We're looking at this price right here is where we should be going to. We could easily get to this price. We could even go higher. Watch. This market could rally all the way up to, hold on just a second. I'm not saying it's going to happen, but if it does, we could rally all the way up to there and still make this right here. You see, you still have another ABCD to the downside. This is where I think we're going today, 35.88. That's what I think we will hit. Do you follow me? I probably lost everybody. Well,
No, Uncle, we can hear you. I told them to
No.
write the questions out instead of shouting out, yeah?
yeah, write them out so I can understand them better. We'll see if we can. You know, it's not hard to look at these things. I mean, this is
No,
rocket.
sir, this is not hard. Basically, I'm using harmonic, but the problem is that the main problem is that once we generally most of the harmonic patterns are based on B point, and in ABCD we are looking for the BC retracement. If the BC retracement is around 0.382, then we are looking for 1.27 or 1.618, because the smallest the retracement is, the highest the expansion is, as I read somewhere. But that is not working for me in Indian markets. I'm an Indian trader, in the market trader, Nifty and Bank Nifty I just trade, and I just want to learn forex also, so I just joined right now
I've seen
for
them.
forex.
There's nothing wrong with those Indian markets. They trade off those same numbers. I've seen Zarif's work. They trade off those numbers quite well. See, all we've done now is we've had a little 382 retracement here off this high, this mid-morning high. That's all we've done here. This is just a really quiet rally. You know, we've only rallied 12, 15 points. That's pretty much nothing in this market here. So unless we get above here, then I would say, oh, maybe this is going to be a pretty significant bottom. But right now, I still think we're heading down to this larger ABCD here at 35.82. But I know you fired out these ratios at me pretty good, which means you know what the ratios are, but you have to figure out where they come from and how they fit together is the way I would try to explain it to you. That's the only reason I know it, you know. Any other questions we have, Zarif?
No, they're all yours. Everyone is fine. Only one question was Ricardo asked, do these ratios stay all the time? Which you have answered already that yes.
Yes, the ratios, I only use the 618 and 78. Well, they're right here. You can see, well, this one puts 382 and 50% in just because it's built there, but I use a 618 and 786, 1.27, and then 1.618. These are the numbers that I watch. 1.618 is very important because once we get above that, there's not, there's no problem to get it. But we do have a nice ABCD here right now. Let's go to a 5-minute and you'll be able to see it a lot clearer. Where's the 5-minute? I don't use 5-minute very often. Yeah, here we go. There's a nice little ABCD forming right now, just as we talk. There's your A leg right here. There's your B. There's your C. There's your D's coming in right about there. And that would be at 36.14. I would be a seller there. And the reason why is I'm in a downtrend. And that is a Gartley pattern. And let's see what the ratio is. It's probably going to be right at 50%. Well, just a second here. Let me get it up here. I got to draw the line in correctly. Yeah, it comes in just about at the 50% level here at 38.14. Let's just put this in here to see if we get it, and we'll mark it off there and see what happens. If I were to sell it there, I would have my stop above this level, so I have to risk 8 points. And my profit objective, if I sell it right there, will be the last down move, which will be right here. So if I'm selling it at 36.13, I'm looking to get out at 35.97. So I'm risking 6 points to make 12. So I got 2-to-1 risk reward ratio in my favor. So that's why I can do that, because I know I'm going to win on this pattern about 7 out of 10 times. Make any sense?
Yes, perfect. Uncle, and also,
Yeah, but you've heard this before. This other young man hasn't. He's the one I'm talking to, not you, my friend.
okay.
No, sir, I'm not shouting. Actually, I'm facing a lot of problem in harmonics, and exactly I'm looking a scanner which definitely helped me to figure out these things on a real time basis.
What are you using these with a scanner, or are you doing them by hand?
Yeah, I'm doing by hand, but I'm looking for the scanner, which helped me to actually scan an Indian market. There is a lot of stocks. For example, in FNO market, we have 210 stocks, and we have Nifty, we have Bank Nifty. So a lot of things are going on there.
Zarif,
Yes.
do you have? Can you pull up one of those stocks and share it in a room and show them the ratio? I know they work because I've seen too many Indian stocks. I know they work. I've got students all over India that use these things, so I know that they're there. You're just not looking at them the right way, young man.
Uncle, I have closed the other machine off, so I don't have.
Okay, let's not get too far away. I've got other people in here, but don't give up. Don't give up. Let me give you 10 cents worth. I don't know if you've done this or not, but let me show you something that if you do this, it'll change your idea of how you look at things. This is an hourly chart here on the S&P. Let's move this over like this. This is over the last 5 or 6 days. Now this is the patterns that are in here. These are called Pesavento patterns that the people that built Ensign software 35 years ago started putting these in. They shows me where the ratios are and stuff, but I actually don't use it. This happened to be just turned on by accident. I'll turn it off and we'll take a quick look at it. Here's what you should do to learn this, okay? And I don't care what you're looking at. Let's just go back here. We'll just grab some of these patterns here, just the major ones. If you would just go and take a straight edge and just draw in the patterns like this, just with your pencil, just so you can see them. You know, just draw the patterns from your high down to your low, high down to that's not a pencil. You should print it out and do it by hand. That's the best way to do it. I'm doing it with a computer, and I'm technically not very savvy. You'll see there's a little ABCD pattern right here. And then what you want to do is you want to connect all the dots so that all these patterns match up pretty good. So then when you see this, you're seeing A, B, C, D, because this is an ABCD within an ABCD. So you got to see how the market's coming down. Now, what you want to do is when you draw in the pattern to see what's going to happen, you're going to say, okay, there's the AB leg. Okay, I see that. And the CD leg should come in to right here. Oh my God, it didn't work. Do you know why it didn't work? Because of this bar right here. This bar right here is telling you the market is extremely strong to the downside. And so this is going to be expanded by what? 1.27 or 1.618. So if you match this and go in and change the, we'll just get up here and change the ratio here of this market, just a second, get it up here, 127. I'm going to make this 127 and watch the red line here expand. And there, you see it even goes a little bit beyond, but that tells you that that's what's going. Just on the upside, you see how this goes to the upside? It's telling you the market wants to expand, but draw those in and you'll start to see them. And as you start to see them unfold, it'll give you an idea of, you know, what you're looking at. I hope that helps. If you did that on 100 charts, you would really
Yes,
start
sir.
to
Perfect.
That's the hardest part. See, remember I told you, you got to learn to do this yourself and defy human nature and do it yourself. That's why when I meant it, well, Zarif, how long did you work with me? A year before you really got it, didn't you?
Yes. Yep. And
Yeah, it was about a year, but look now, he could teach this stuff. He's very good at this. He knows what he's doing now. Seldom, he has losing trades just like everybody, but it doesn't, that doesn't make a whole lot of difference. You're starting to see the patterns unfold because they're there all the time. I'm just looking at this. I can see these ABCD patterns, and these are just small ones. Remember, this is an hourly chart, but if you were, just a second here, to get this thing to work a little bit. If you just drew the ABCD in here, I mean, how hard is that to look at? See, that's not hard. This is nothing more than what we've been doing this morning. This is the same thing. It's just doing the same thing, but you've got to be able to, you got to understand how the ratios and patterns align together. Remember, the ratio comes before the patterns, because Einstein said mathematics precedes geometry. So that's why you have to look at the patterns first, which are the ratios involved, and then the geometry is the second part of it, the ABCD part. Any other questions?
I think you answered it. Manchis is asking, do you need special software to do ABCD? No.
No. You don't need. The best thing to do is to learn to do it by hand. But the problem is there's so much available, like TradingView, which is pretty much free, has all this stuff in it. The program that I use is only $50 a month. There's some people sell it for a whole lot of money. You shouldn't buy it because it's way overpriced. You really don't need that. The best way is to learn to do it by hand. But if you're going to do that, you've got to focus on one market till you learn it really well. Because if you learn how to do the euro or the S&P, you can learn to do anything because they're all alike. It doesn't make any difference what you're looking at. They're all the patterns are exactly the same. Look at the euro here today. I mean, this was one of the ones that we talked about a whole lot, and that was the fact that the euro is going to have a lot of trouble up at the 120 level. This is just the ABCDs here we're looking at just recently here, but this morning when we were doing the radio show and talking, we were just get this daily up, I believe. There it is here. Yeah, you see it went up and matched the old high here at this same level. There's your A, B, C, D pattern right up at the top within 10 pips of the exact top. Now it's down 40 pips from your thing. And so you're basically in a risk-free trade at that point. And so those are the ones that you're trying to look at. Look at this here, going back, see the 3 drive pattern? There's drive 1, there's drive 2, there's drive 3. Look at this, A, B, C, D. See, that's really what you're looking at as you're going through some of these. It's not anything. Let's take a look here, move this out of the way a second, and we'll get the gold up, because gold is one of the ones that we trade almost every day. We'll get it up here to take a quick look at it here. And should be right in here somewhere. Yeah, yeah, let's go into Feb gold, because that won't have as many lines on it because I haven't done much work on Feb. But we're in December, and we're out of the December gold right now. In fact, let me do December because that's what we were in, and it's still valid. Let's get this up here. Let's do the daily chart here. This has been our biggest win in 2 months. This is the gold. Move it out of the way here a little bit. We've been following this from the short side ever since right here. Well, this going back here, we had the major top, and then you had a really significant bottom here. You can see the butterfly bottom that came in right here. There was the price objective. Then we had this really perfect A, B, C, D, right on the money here at a 50% retracement of the high. I think I get this out of the way a little bit. I got all these little numbers here. I don't know what these guys are doing here. I hope it doesn't. Anyway, that's what we did. Like I said, we sold our first unit here. We sold our second unit there. We sold our third unit there, and we covered everything today right here at the 78% level, which was at 68, and it's trading at 76 right now. So it's reversed a little bit. But that also completed the smaller ABCD pattern that was here. There's your AB leg right here. You see your CD leg came right down here. That's where we covered it right there at 1768. That's where we we covered that one. So that's really what you're doing. You're just doing by hand and practice a little bit. You know, there's a lot of little tiny patterns in here, but focus on the ones that you can see and see easily, because if you do enough charts and look, and believe me, folks, I've been looking at these for over 50 years, so to me, it's nothing. There's not much that gets past my eye. I miss a whole lot of stuff, but, you know, I see it, you know, eventually what I'm looking at. So I hope that helps as far as, you know, the main thing that you want to be looking for is to find those simple ABCD patterns, and that's it. It's nice when you catch a running market like this. Let's just get rid of this out of the way here. Boy, these things are, that doesn't, I guess that go-to meeting doesn't show up on yours, but it does on mine. Let me get down to a 15-minute chart on this one. We'll get some of the smaller ones that were in here as we looked at this thing on the way down. Okay, here's where we really started the move big time down, was right here. If you'll remember here, going back here, we had another Gartley pattern here, the small one right there. That was a really nice one. We'll just get that one up too. That was the 382 one. Let me get that one so you'll be able to see it real easy. I think that was it. It was 618. Hold on. This one was the 382. Just get it right very quickly. I don't have time to go into the 382, but boy, it's a monster when you get that. Then you have the second one that's right here. I'm going to redraw that so you'll be able to see it. You can see the A, B, C, D pattern right here. I'm just going to try to connect it. It's a little difficult because it's so small, but there's your A, B. Didn't draw it the right way. Hold on just a second here. Seems a little sensitive. There we go. See, that came in right there. And then here was the big low. And what we did was we added our third position right here on a sell stop. Look at this big move down. I mean, this was caught everybody by surprise that this was going to happen. And now what we did is we covered everything right here. That's where we covered the whole thing. And now what we're going to be doing is looking to go long. In fact, I came really close to reversing the position, but I still think there's a strong outside. Well, we'll see. There's a still possibility that we could make this level right here, which is at 1724. That's what I'm waiting to see. Now, remember, we've been down 10 days in a row, so we're extremely oversold. So I want to see how the market reacts in this area before I get ready to go long. But this is a very bullish pattern, folks, on a long-term basis. Here it is right here. There's your ABCD right here. That's that 1720 level that we're looking at. That's a 61% retracement of the low here in March. Remember when the stock market made its major bottom? But look at this, folks, just to show you how powerful this stuff really is when you look at this. If you went from there's a Gartley here, it happened way back in 2016. This was the big bottom. That was a beautiful 3 drive to a bottom pattern. But if you'll notice here, from your low here on 2016 to the high that we had here, I'm doing this from memory, but I'm pretty sure I'm correct. You'll see here that the market stopped exactly in a 382 retracement within $3 of the exact. In other words, this was a 382 retracement of this low right here, came in right there, correct?
Yep.
Right. Now, if that's a 382 retracement, that means that this is A, this is B, and this is C. So what should this be? This should be D. So all you have to do now is to prove that you're right is you take from your low up to your high, that's your AB leg, and you add it to this one. There's your high in the market right there, 1.618 expansion at 2072. And we've got something that is telling us that I just sold some stop and P. So it just made our level. Hold on just a second. We were looking at that on a 5-minute, I believe. Hold on just a second here. There it is right there. We're there. So 1375. And then we're going to see what happens from this level right here. You get your money back if this doesn't work. Money back guarantee here today. Only once in a lifetime. Okay. All right. Let me take, what time is it? Oh, my goodness. We've gone an hour and a half already. This is good. We're coming along pretty good. Let's ask. Do you want me to do another market?
any other market you want to do? And one question was,
NASDAQ.
to enjoy this. What about fundamentals?
NASDAQ. Haji, can you hear me?
Yes.
Okay, now I'm going to give you my dissertation on fundamentals. Okay, is everybody listening?
Yes.
Okay, the fundamental dissertation is now ended. What can we do next? Fundamentals don't work, folks. That's stuff that's in the background. Look at this chart right here. The only thing that matters is this has been going up. That means there's more buyers and sellers, right? When it's going down, there's more sellers than buyers. That's all you have to know. They're not going to tell you anything more than that. They're just not going to do it. You know, you can put all kinds of stuff up there if you want. Let's see if I can fire up a moving average in there if you want to look at that one. That's always good. I can put some oscillators in. None of that stuff works. Look, by the time this thing turns up, you're already here. By the time this thing turns down, you're already here. You know, you want to be down here where the ball of the game's being played right now. Right now, that's where the game's being played. You don't want to be involved with any moving averages, that's for sure. They flat out don't work. I mean, they're put in this program, but I never use them. I use A, B, C, D. I mean, there's nothing fancy about that. Look at just sitting there. You know, I don't know what lose data or something. What happened?
No.
No, it's still trading there. 1637, 3613. So we'll see if it works or not. I don't know, but that's it. Uh-oh, did I lose data? Shut the front door and raise her in. Just double check something here. Huh, maybe I did. I don't know. No, I'm still getting data. Why is it stuck there at something's wrong? It never stays that long. Just a second here. You see it's not changing here?
No.
This is not right. What is wrong? I don't know what's wrong here, but that's not right. Does anybody, can someone check their prices to see where we're trading in the S&P?
Can you check?
Because it hasn't changed.
Right at 35.14.
At 36.14?
Yeah, sorry, 36.14.
36.14 was a number right here. That was the number we were looking at. That's where the beeper went off. I had my order setting in at 1375. That's where I put it in. I put it in a little bit below that number with a stop above here. But why am I not showing my data coming up? This is not right. That doesn't happen. Let me check one other time here. Nope, I'm not getting data, boys and girls. I don't know what happened, but
Mercury.
yeah, no, it's not nothing. Mercury is not retrograde.
Communicate.
Okay.
How about NASDAQ futures, Larry? NASDAQ futures?
NASDAQ, yeah, we can do the NASDAQ. Hold on just a second here. Just give me a second. I can get the NASDAQ up. This is a very difficult one for most people because it takes a lot of capital to trade it because it is such a, let's just get up and we'll do an hourly chart on it. Okay. All right. No, why does it keep, how do I get rid of it? Can you see this go-to meeting thing in the
On my side, I don't, Uncle.
yeah, okay. Well, it covers my
Oh.
I'm sure there's a way. I bet it's probably this. Let me try that. No, that's not it. Man, that's no good. Oh, no, I really messed up. Okay, let's not worry about it. Okay, here's the NASDAQ. Let's okay, here's NASDAQ here. This is an hourly chart. And let's just double check here where we are so far today. We'll move this around. On the move today, we came down. Now the NASDAQ, because it's much stronger, you'll see here that what we did here, I'll move this over so I can get the thing up. From the high down to the low, remember we made a 61% retracement on the NASDAQ. We made a 78% retracement, excuse me, 61% retracement on the S&P. The NASDAQ made a 78% level. They both made the 1.618 expansions, however, you see. And so now what we're doing is on the NASDAQ, we're coming back right now, and we should be right at the 61% retracement right now here in the NASDAQ at 12.2222. Is that where it's trading right now?
Haji?
It's right now 20, yeah, 12 to 20.
Okay, so the number was 12,222. That was the 61% retracement back. And it's also, you know, if you're going to be doing these numbers correctly, if it's a 78% retracement of this one, you should see what the retracement is from here to see if you have another Fibonacci number coming in at the same time. And you'll see here that the 50% retracement comes in here at 12213. So I have to go with the last swing, which is at 12,222, and so that's what I was saying is that's what it's most probably do. But this is a zone where you should be, and also one other thing, we talked about those harmonic numbers. Now this is a quick and dirty version of it, but remember in Dr. Lowe's book, he said markets repeat over and over again, and you should look for that repetition, repetition. So as you're watching these repeat here, let's just get rid of all this junk here that's in here. In fact, get rid of the Pesavento patterns thing and get it out of the way. And here's where we are. Move it out of the way here. We want to see the last move that we had. We had a strong move that was this distance right here. We went from 12,190 all the way up here to 12,300. So it rallied 110 points. So what you want to do is you want to see this 110-point rally that came right here. Now, if this is correct, the next rally should be really close to 110 points, and that would take us right about there. So you've got a harmonic number here at 122.09. You got a fib number at 122.20, and you've got a 61% retracement at the 122.22. So that tells you this is where the pedal meets the metal. It should stop right about in here, just like with the S&P. But for some reason, I have lost data, and that doesn't make me very happy. See, I'm still not showing any data here, am I? Or are we finally? Wait a second.
NQ is also bearish right now.
What is?
NQ, Nasdaq. Is it also bearish right now?
Is the Nasdaq bearish right now?
Yeah.
Yes, it is. You see, because it just reached, it just made this level here at the 61% retracement of this move right here, which was equal to this move right here. You see how this move was equal?
Yes. Yes.
That's just repeating over and over again. And see, remember, the ratios come before the patterns. The ratios are the most important to look at. Believe me, you should follow through with this because this is all part of your ancient history, folks. A lot of this stuff, this mathematics, those numbers that I showed you of 1, 2, 3, 4, 5, the folks in India were doing that 1,000 years before the Arabs were doing it. So they're way ahead of that stuff as far as the DNA is involved. But you just have to learn. It's different because there's no oscillators and anything like that. But there's nothing, really, really mysterious about it at all. It's not that hard. The trouble is you're only going to be right about, 6 out of 10 times. You're going to break even a couple times. You're going to lose a few times. And your loser just means you're that much closer to your next trade. That's, that's basically the bottom line of what you're watching. Why is this not working? Try to tell article. We still don't have any. No, see, I'm out of business here in the S&P. I have no
data is stuck.
No, something's wrong. You see,
Yeah.
it's not can't be anything to do with the connection because I have the top of the line, all this stuff, and I'm not getting it. That's not right. This should be moving around. Let's move on to a 2 minute to 3 minute. Let's move to a 3 minute. No, even no data coming in. That's the problem. Huh. Shut the front door and raise the rent. Don't be darned. Any others that you might want to take a look at?
Uncle, someone was asking what is the difference between ABCD and XABCD?
Oh, there's no difference at all. No. Well, here, let's just take a quick look at this. All right, let's just draw this in here. I'm just going to draw in the number here. See, here's A, B, C, D, okay? But if you're going back to this level right here, this is X. You see?
Okay.
This is X here, and then there's the A, B, C, D there. You follow me?
Yep.
X has got to be at a higher if it's at the top or a lower if it's at the bottom. And that's all you have is the A, B, C, D in between. It goes back to that same diagram. Remember on page 250 of Gartley's book that you have downtrending channels and uptrending channels. See, this is starting to be an uptrending channel now because you have a higher bottom. What's the last price in the S&P? Did we get higher than 36.16?
Haji, anyone? S&P, ES, where is it at?
S&P is right at 11. 36, 36, 10, 36, 11. Wow, it moves fast.
36.11. So we made $200. And so what I would do is I'd have my stop working at 36.17. So my risk now is only $100. So that came pretty close to the exact number. So that's not hard to do, is it?
And Uncle,
Sorry, go ahead.
no, Haji, carry on.
No, I moved my stop into profits very quick again.
Very good.
Well, don't, hey, that must be Attila, right?
Yes.
Yeah, well, you're a master at moving your stops too quickly.
So, who is the top guy? Zari for me, your student, top student.
I'm students as well. Actually, I'm the T-boy.
Okay. Well, this is just showing you. I can't understand why I'm not. I mean, everything was up and running, good data. I don't understand. I know I'm getting. I know I've got the internet and everything working because I see all that stuff up and running. So I don't know what the heck is wrong with the prices. I don't understand that. That's huh.
Uncle,
Even the NASDAQ is not working.
Okay, and someone is asking if you can have a quick look at Kiwi and NZD USD.
What is it?
Kiwi, NZD USD, forex.
What's the cross rate? What is it?
Kiwi, yeah, Kiwi.
Oh, that New Zealand dollar?
Yes.
Speak English and I'll get it for you. Hold on just a minute. Hold on. Let's go here. We'll get the New England dollar here. New Zealand dollar. Where are you down here? I know I got it in here. So, well, there it is. Oh, that's the Aussie. Where is it? Here it is. Oh, no, that's not it. Where's the...
I can see AUD NZD, but I can't see NZD.
I don't see the New Zealand. Why don't I have it in there? I always have it. Let me put it in. Hold on just a second. It'll be... I can do that without any trouble at all. Whoops. Hopefully I got data. I don't even know if I got data for that. I should have. Let me try and see this. Oh, I'm not, hold on. Let me see if I can get it refreshed. Refresh unavailable. No, it's not getting data. I don't know what the problem is. I'm sorry about that. I can do it with another.
Yeah, anything, Uncle, anyone. Pick anyone you like, any Aussie one.
Hey, you got a lot of people from Great Britain there, right?
Yes, quite a few. Yes, they all trade cable.
Right. This is going to be big because you've got a big one coming up here with this. Where are you? Here we go. Here's where we are. Yeah, see, this is the one I really want to short. I did a euro because it was easier today, but to move this out of the way here so I can see it. We've got a really nice ABCD here now, and here we are into this Brexit thing. But if you'll look at this closely, you'll see that we just completed a very nice ABCD pattern right up here, right at the high on Thursday. See this? What did that do for me? That's no good. Let me get this out of the way. Get that out of the way too. Hold on. We just completed a nice ABCD pattern right here. Okay, and I think that's really good. Now, this is very important because this level here, it's taken about 3 months to make this move right here. We couldn't take this out. If you go back and look at a weekly, you're going to see something that's very, very important here. We'll get this over here. You see this Brexit right here?
Yep.
Okay. This was a 61% retracement of the high from right here at 150. And we had an order to sell it at 149.82. And we got filled. And look what it made the A, B, C, D all the way down here. We got out of it down in here a little too early, but that was a monster move. And look at the 78% retracement here. And then what did it do? you can see there's your A, B, C, D comes in right here at the bottom within 50 pips. And this is where we are right now. You see this number right here, 382? That's a 382 off the Brexit high, folks. I mean, this is a major high possibly here in the British pound. Now, if they pass something over there, I don't think it's going to make a great deal. But the big surprise is if they wouldn't, then you'd have a big sell-off. So your risk here is about $500. And if you're right, it could do pretty good. So that's why we're watching the British pound so very closely in here, mainly because of this smaller ABCD pattern on the daily, because that allows us to control our risk. We just put our stop here. The risk here on this is only 80 pips, so that's a really small amount. Here's something else I should have covered that I didn't. Let's just do that. We talk about ABCD in time or in price, but let's look at the ABCD also in boy, this thing is just really a pain in the ass. Excuse my language. I'm talking about this thing from GoToMeeting. It still shows up on my chart. Look at the distance. Now this is important, folks. Look at the distance between the A leg and the B leg. Okay. Now what you want to do is you want to measure that. The best way to do it is just to count the bars. If you come over, you'll see it was 20 bars, 20 daily bars, 20 days up, and then it had a correction, didn't it? Okay, so you look at the correction, you'll see that the correction came down and stopped exactly at the 61% retracement. All right, now if we're up, if AB equals CD, is that correct? Then what we should be looking for is we should be able to see a move in the CD leg equal in time. So if it's 20 days up, it should be 20 days up, and look where we are today, 20 days. There we are. So you've got time and price together right here. Your stop goes right above there. If you're right, you're going to make this much, which is 31 down to 27. That's 450 points versus 80-point risk. That's a 6-to-1 ratio, and that's what the game's all about. Do you see the relationship here between the highs? I mean, that's just it's just cloning the thing, but that's showing you that the same thing is happening. In other words, the same number of bars in the AB leg equal the same number of bars in the CD leg. That goes for up and down, but those are some of the things that we're looking at. You can do it on a shorter time frame too. You can look at it from a little bit different time frame. In other words, in this move here, it went 1, 2, 3, 4, 5, 6, 7, 8 days up. So if it's 8 days up in the AB leg, 8 days up in the CD leg. 1, 2, 3, 4, 5, 6, 7 was the 7th day. Well, just 7th day. You can see how close they are. So that's what you're doing is when you're watching that, using both time and price together. I hope that helped. Any other? I mean, there's a lot of information here, but I can't do it all in 2 hours. That's just a little too much. I don't know why I'm not getting data though. That's what really bothers the heck out of me for sure.
Uncle,
Yeah, we're still not
Uncle,
getting
they
data.
are going to ask for a refund. You said you're going to make them into professional traders in 2 hours.
These folks want a refund. Sarah's going to get the checks out to you today. We're going to get refunds for everybody in the UK for our free seminar today. Okay. Sarah has just told us. Sarah has just told us, Sharif, double your money back today.
Oh, perfect. Free and double money. You see. And and we will post date them to 30th of February.
Okay. Any other questions?
Yeah, I got a question. Can you hear me here?
Yes.
Yes, perfectly. Yeah.
Yeah. So thank you very much, both of you, for your time. The question I have is, how do you know in advance at which Fibonacci level the price is going to retrace?
That's part of my advanced course. That is $10,000. Unfortunately, it's all booked. Oh, wait a minute. One course has just become available. Hey, let me give you a little bit of advice here. You're asking me what's going to happen next, aren't you? I don't know the answer.
That would be pretty useful, yeah.
No, see, I try to get it as close as I can, and that's all I know. I don't know whether it's going to work or not. I mean, I look at this euro, it looks great. I look at the S&P trade, it looks great, but I don't know whether it's going to work or not. I really don't know.
Okay.
I really don't know.
And Uncle, somebody asked, when of course, when the harmonic pattern or when a pattern fails, how do you keep a
Well, you have the patterns failed, and they usually tell you right away. The good part about what we do here is either it works right away or it doesn't work at all. Like the S&P trade, I doubt if it went much above 36.14, and then it started down. Whether it's going to continue down or not, I don't know, but it started to work. I know that one is in play. If it gets above there, there's something wrong. That's the bottom line, because you don't know what's going to happen next. All you can do is put the ratios and the patterns together, and when they're working, they work great. When they don't work great, get the hell out of the way. That's about all you can do. No one can tell you what's going to happen next. Impossible. Should not happen, will not happen, cannot happen.
And also, Uncle, as you showed, like in the butterfly pattern and everything, it tells you exactly near enough where to put the stop above.
Yeah, well, just about everything we do is about a $500 risk maximum, with the exception of gold. Gold, you've got to go because of the volatility now. You got to go to about $1,000. Crude oil, you're about $750 on crude oil. That's another one that is very. In fact, that was one of the. Let's just double check here to see where we are. Let's get up here to where we are. Let's go to the chart here. Maybe we can find a crude oil chart here. Why am I not getting the data? That's what scares the hell out of me. I don't like this. See, the crude oil was the same thing that we had here. Let me get this crude oil chart up. I think it was 4 hour. There it is, but I don't even see. This is not right again. Oh, I'm not getting data here either. That's not right. Hold on. Let me check something else. This is not good.
Maybe, Uncle, reboot your charts or something. I don't know.
No, I can't do that until I'm afraid to get knocked out of 2 meeting. We only got a few minutes to go, and I don't want to do that. But I'm certainly. It happened when just about 15 minutes ago when we were watching it. What's the last on the S&P? Does anybody have an idea?
Haji?
Yeah, it is 13 right now, 36.13.
Okay, so it's back to pretty close to where we sold it.
Yeah, exactly.
And how low did it get? To get to an 09 or something?
It get there pretty much fast. I mean, in just a second. So 12. I mean, at 12, it started. 12 minutes ago, it started to swing high. From swing low to the high, and it's forming a double top here.
How low did we get after we got in? Did it get to 09 or 10 or what?
I think it took like just a second.
Yes.
10 minutes.
Yes, Ricardo is saying.
What was the price?
Ricardo is going to
3609. 3609.50.
Okay, so it came back 4 points. Now it's back. So you'd be in a risk-free trade there anyway. So you'd be basically out of that break even now anyway. So the way I would look at that. I don't know why I'm missing data. I'm sorry about that. So anyway, I'll wind it up today. Any other questions? I'll stay on a little longer if you have any more questions.
Oh God, somebody is asking, Silia asking, RSI, MA, MACD, all indicators in the bin. Thank you very much, Siles.
Yeah, just put them in the trash can and put a lid on the trash can. Don't let them out again.
Burn it.
Yeah, burn it.
So brilliant, Uncle. Thank you so much, Uncle.
One more question. What do you think about the trend lines?
Trend lines are good. I used to use them all the time, but now because of the ratios and stuff that I know, stuff is so accurate that I really like it. But they're very good, especially when they're in a really nice trend. Let me give you an example here. See, if you draw a trend line like this, see, that's what they call a valid trend line, because each of these lines right here is at a Fibonacci retracement. You see, you come up, you pull down to the 61% retracement. You pull up, you pull down to the 61. Look what happened when you broke below here. Look how quickly you broke down. See, that's a valid trend line. It's valid because of these numbers right here. You see?
Okay. Yeah.
And this is what you're looking at here in the S&P or NASDAQ on this big move here. You'll see the ABCD pattern is nothing more than a 3 drive to a top pattern.
Yeah.
See? And so this is a valid trend. They're very good, but you have to have 2 valid points. You got to have 2 valid. There's your third point right here. Look what happened when you went through there. It went, whoo. Of course, it came back and touched it again, but that's another thing that it'll do. It'll come back and touch this and then back off again. So they're very valid. That's all part of looking at parallel channels, that type of thing, you know.
Nice.
They all but they got to be valid. They got to have retracement numbers that line up with those lines.
Yeah.
Okay. Uncle,
Thank you.
there's 2 more questions. One, Ghazi is asking if you can give a bit of wisdom on the mental stuff, trading psychology. I know our late dear friend Mark Douglas stayed with you and wrote the book while you were at your house. Yeah.
He wrote the book in this house. Yeah, right here in this office. The main thing is I would get the copy of Trading in the Zone with Mark Douglas and read that book.
Perfect.
It's got 2 years, 3 years of information in it. It's fantastic, and it's very good. Also, I'm a firm believer in neuro-linguistic programming, and you can listen to Tony Robbins. Anthony Robbins does some really good stuff with neuro-linguistic programming, and then do some psychic reading and stuff. There's a lot of stuff that helps you to get well centered. Most of the folks I imagine there are many are from are Muslim or Indian, and that's all built into their DNA, because that goes back, history of that goes back thousands and thousands of years when people were doing that when nobody else was doing it.
True.
So it's very important to your culture, and so that gives you a advantage if you'll learn to read some of that stuff.
And the other one, final one was if you can have a look on silver chart.
Silver,
Yep.
that's one of the reasons why I covered the gold today.
True, but I'm only the messenger, Uncle.
Can you hear me?
Yes.
Who is that?
Okay, here's the silver.
Okay.
Okay, now you see the low today in silver was right here. You see the low right there? Okay, I'm looking for this low to come in right about here. And what came in right here, and look what it did. It came in at the 1.27 expansion number to the exact tick. So that tells me that we made a major low here in the silver probably today. And if I look at it really closely, which I'm going to do tonight, there's a strong probability that we made this. This was one of the reasons why I covered the gold, because silver couldn't break like the gold was breaking. It was still holding up well. There's your perfect ABCD there, almost to the tick. See, there's your first one, second one, third one. So this is pretty much it. I'm going to be a buyer of gold tomorrow if I can find a small little pullback where I don't have to risk more than about $8 or $9, because I'm not giving up very much of that money that we made. I don't want to do that, but I think it's got a chance here. If we do the daily here, you'll see. I originally thought we could get here in silver at 1860, but stop and think. Gold is down here. Look where silver is. Silver just took out, matched this low to the tick. Look at this. This low here was at 2181, and this low today was 2196. So it couldn't even take out this low, and has already rallied 65 cents. That's not the sign of weakness, is it?
Nope.
No. I think this might be it. This might be it.
Somebody saying, Uncle, should we wait on gold to around 1720 area?
Well, yeah, that's a smart thing to do, I guess. But and believe me, I had a lot of, like you heard me on the radio show today. I said I kept looking at silver, and then I was watching, the fact that we have this solar eclipse, lunar eclipse, full moon, and that's a big cycle. And so with the way that silver was acting, couldn't make new lows, and gold was still, crashing down and stopping, right at the smaller ABCD there at 1767. So the difference between 1767 in 1727 was $40. Well, if I'm in this, I had $240. I don't really care about that last $40, basically.
True.
What would really upset me, and you know, maybe I don't think it'll happen because markets don't end like this, but if some crazy thing happened and it would gap up 60 or 70 bucks and then take off, and I'm sitting there still short, and well, I have a stop in, so that wouldn't make any difference. So I was just nervous, and when I'm nervous, my body chemistry is telling me get the hell out of the way, and I had all the reasons that I needed to get out of the way. So that's why I did. Plus, I had a lot of people that were happy. So
yeah. And also, Uncle, like you told me before, it's not a bad thing to leave a few breadcrumbs for others when you had the bulk of the meal. You know, that's fine. That's fine.
We are back down on yet even S&P.
Okay.
what happened?
You said we are back down.
Okay,
Yeah.
well that's good. See, well maybe it works, maybe it just works some of the time, but not all the time. Just remember that if you study hard, you'll learn to do it, but you're not going to get it overnight. You're not going to get it in 2 hours. So, but you can get it if you put some time and effort into it. Zarif has certainly proven that. He's turned into a very, very studious young man.
Uncle, I'm going to send you the $20 straight away.
I thought it was, excuse me, I thought it was 30.
Oh, okay. 25. Yeah, halfway. We negotiate.
25, all right, I'll cover the distance.
We negotiate.
Thanks for joining me, folks, and may God bless. And Zarif will have the PowerPoint
Okay.
and the other links that you might have. So I hope you enjoyed it, and may God bless and have a wonderful holiday and stay safe.
Thank you so much, Uncle. Thank you so much.
Okay. See you later, gentlemen.
Thank you. Yeah.
Bye-bye.
Okay.
Thank you.
Bye-bye.
Thank you.
Okay.